Hello, how are you? Hope you're doing well and this finds you well. Okay, let us continue to what you are doing. In our last video, uh, we defined what is Forex, what is traded in Forex, and how traders make money. And now I promise that you're going to continue and go in depth of that. So today, I want us to look at these three objectives, and I hope you're doing practice and as we said, for you to understand these at the beginning may seem complex, but for you to overcome that is for you to do some practice. So I hope you are doing some of it. So today I want us to tackle these three questions. Number one, categories of currency pairs. Number two, the trading sessions. Number three, the volatility of currency pairs. As simple as that. It's just a short video so that you're going to be able to handle the knowledge that you should be able to understand. Let's continue. So we have three categories of currency pairs. One, we have the major pair. Number two, the minor pairs, also called the crosses. And the last one is the exotic pairs. Three major, minor stroke crosses and the exotic pairs. Now, let me remind you of what we said is a currency pair. A currency pair, I said, is a pairing of currencies where the value of one is relative to the other. The price of one currency is relative to the other. That is what we said is a currency pairs. Now, the major currency pairs, if you look at these images that I've uploaded here, these are the examples of the major currency pairs. And what do they have in common? If you see, they all have USD in as one of the currencies in that pair. As you can see, we have USD here, we have USD here, you have USD here, you have USD here. Now, so the conclusion is major currency pairs must include the US dollar as one of the currency. As simple as that. Now, I've just illustrated that major currencies must have what? USD or the US dollar. Now the other category is a minor currency pairs or what I've said is also called the crosses, and these are very many. For example, we have one that have a euro crosses, meaning euro is part of the pair, and we have, for instance, for example, you have euro GBP, euro GPY. There are very many too, and this is something that is no, it's not hard to understand. So it's very simple. So in the end crosses, we have GBP, GPY, out GPY, card GPY. There are very many too. We also have a category of where we have the pound crosses or GBP crosses. That is GBP out, GBP card. There are also very many, and I think this is something simple that you should know, but you should not just stay onto that so much. It's just something that is fundamental for you to understand. Let us answer the second question, the trading session. This is the very most important thing that you need to understand, because as a forex trader, you must know when to trade and not when to trade. Now, we have 4 trading sessions, namely Sydney session, Tokyo session, London session, and New York session. Now, in East African time, or for instance in Kenya, the Sydney sessions opens at 12 a.m. and closes 9 a.m. The Tokyo session opens 2 a.m. and closes 11 a.m. The London sessions opens 10 a.m. and 7 p.m. Most of it, for me, the best session of the session that I trade is this one. That is the London session, because it's during the daytime, and that is when I have time, to analyze the market and execute too. Because now the rest The rest, you see, they have like the Sydney session is 12 a.m. That is a midnight, so that is not convenient for me. So I just trade the London session, so I enter the market at 10 a.m. and exit roughly 7 or 6. So that is what I trade personally. So now, and there is also a thing that you should consider, or you should know, that these sessions overlap. And when there is a session overlap, there is a high volatility. Now, let me explain what is volatility. Volatility means how much quickly the price of a currency pair goes up and down. I've uploaded here an image to illustrate that. Now, let's say, as you can see, this pair here, let's assume that's a currency pair, and we do a comparison with that and this one here. And I hope you can see that there is change. There is a difference in price movement in these pairs. So this was uniform, but this one opened here. You see, it's kind of it's not uniform. So that is what is called volatile. So this pair here, this pair here is has low volatility, and this one has high volatility. So for me, I choose currency pairs that are volatile, meaning that the more the pair that I'm trading, the price is likely to go fast, to go down or high very fast, and that you can make profit in a longer period of time. So that is what we call volatility and the importance. So as I've said, it is important to trade in the sessions that is more volatile, or the currency pairs that are more volatile. And what causes volatility, for instance? One is market liquidity. Liquidity, again, let me define. Liquidity refers to how easily an asset can be bought or sold without affecting its price. It's a key factor in volatility, meaning if, for instance, these markets here, for instance, these pairs that I've used here, liquidity means how many, or the quantity of people putting the money on that currency pairs. This one, the one that is more volatile, or that is less uniform, meaning there are very many people who have invested their money on that pair, making it to be more, exposed to prices going up and down. So that is what you call liquidity and volatility. As simple as that. And I hope you're understanding what those information or those terms, because they are very important, and you're going to use them. You're going to use them in many cases. So that is what I intended today for us to learn. I've said I've just expounded on the categories. You've said we have 3 categories. I've expounded on the trading sessions, and I said we have 4. And in our case, we are going to be trading on a London session because it is the most convenient for us. I've also expounded on the volatility of currency pairs. And for me, for instance, I mostly trade a pair called XAU USD. I'm going to expound deeper on that. So that is the most volatile pair that we have at the moment. So I hope that has helped. And if you have any question, let me know. Thank you.